Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Gowden. Jumping into the charts on this October 14th. Overall, it was a pretty nasty day in the markets today. Many stocks had relative weakness on the session, completely giving up a lot of yesterday's gains, and the relative weakness really shows in the stocks that gave up all of the bounce from yesterday. With that being said, the S&P did hold its lows from yesterday, but it's really interesting because this is the low on this yellow line from the previous candle low before the CPI print. So we have pretty much nearly given up all of the rally from the CPI print because this was your deflationary, your fall heading into the reaction from the CPI, and then you rallied out from it, but you pretty much gave all of the excess and positive rally from the CPI away today's session. With many stocks, like Tesla falling below their relative lows. Microsoft was strong, Apple was strong, Google was strong, but Tesla was clearly a weak one on the session, and it was due to the fact that yields surged again, as well as the dollar. Let's just take a look at the intraday action. Basically what happened today, this was your CPI event, big market reaction, then you started rallying higher, consolidation, push through, consolidation, push through again. This was today's gap up, fade, pre-market rally, and then the dollar started rallying, interest rates started rallying, and the futures were actually very strong and green last night, and then you just started fading all day. Clearly no one wanted to hold into the weekend, and you pretty much gave up yesterday's CPI massive magnitude run, which leaves you with only this little bit of a positive accumulation zone. So I still think there's a bunch of accumulation patterns that are occurring in this market. This type of downside consolidation actually favors a move up to the upside. So I still think we're naturally oversold, especially on the daily chart. Yes, we haven't fulfilled this downside move of this head and shoulders, which would bring us right around down to this level. So we could see more downside, which brings us to that level, but we still have a pretty identified low to trade against, and it's on volume, which signifies that I do think this potential candle does signify more upside, because technically in the short term, any consolidation inside of this range is now considered bullish inside consolidation. So let's take a look at the weekly chart of the S&P. The S&P is still holding this mega level, the weekly 200 MA. You can clearly see there's a couple key levels of support here. This is where we kind of broke out of your pre-COVID high, and where your QE valuations really started running to the extreme upside. So we've pretty much negated that extreme upside. Yes, if the economic conditions do deteriorate, we will likely see more downside. I certainly think we will, but I think we're going to see a bounce, a technical bounce, before we start to see more downside. So this is a long-term buy zone. Typically, if you're a long-term investor with a 5 to 10 year horizon, buying at the weekly 200 MA has proven to be a great opportunity. It would have been great over here. You came close to it. You came close to it. It would have been great over here. It even would have been great over here if you sat through a drawdown of basically 1 year or 12 to 16 months, and then you rallied back another 12 to 16 months, so that's 3 years. And then the next 2 years you had a rip-roaring rally. So many times, most often, when you buy at that key level, it generally represents a great buying opportunity. So let's just monitor that weekly 200 MA. Let's take a look at the Qs. The Qs aren't as lucky. It is closing on a weekly basis below, but you still haven't confirmed. You are at massive technical support. The positive is in the short term, you are holding that inside bar, technically bullish consolidation, which does favor a move up in the short term. I do like that the semis held its lows. The likes of Tesla, just to compare the relative strength basis, Tesla closed below its yesterday's low, completely giving up the bounce. If you look at Apple held pretty much a big portion of its bounce. Same thing with Microsoft. Microsoft actually had really great relative strength. So many sectors did have relative strength, but a lot had relative weakness. If we take a look at oil, the USO chart, big weakness in the oil chart today, down 3.24%. So that is extremely unhealthy, especially since you did close the week back inside of this downsloping channel. If you look on a weekly basis, let me just erase that. Since you're closing back inside this wedge pattern, it does favor a move down to this gap fill, and then once you fill that gap, you could also start looking to close below the weekly 200 MA. But it does represent potentially a sharp move down in oil. If you were to fall to the low end of this range, you're talking about a 10% decline in oil, which would already put us significantly in the money. We are in the money already, but I'm certainly looking to squeeze a bit more out of this oil trade, especially just due to the overall significance of oil. If we take a look at nat gas, well, this is one of our FNGR shorts. It had a sharp decline today, a decline of 22.9%. So we're in the money about 20%. That's good to see. I still think we can get to gap fill, which would put us in about 50-60%. Let's just take a look at natural gas. So natural gas is still hugging this trend line. I do not have the guts to short it, considering it's had 6 down weeks in a row. I wouldn't chase this. Despite it being bearish consolidation, you are still holding support. So we could see a headline where it pops natural gas, maybe to these upper wicks, or even higher, and I'm not prepared to take that risk at this point in time. Let's take a look at gold. Gold was pretty much demolished today, still closing at pretty much yesterday's wick low, but making a new low intraday. It is holding support, but this chart is getting overdone to the downside. You do not want to really lose this level, or else it looks like gold will probably head to the 1557s, 1560 range. Silver, we have been accumulating more silver. I still like the silver trade setup. If we pull up the silver chart, you can see that it's had a big decline. We sold up here. Now we're accumulating more silver. We accumulated at the retraces of these two key breakout zones. Then we added a little bit more at this trend line, and then we've accumulated a little bit more at this support line over here. So we've identified the 3 major levels. We really don't want silver to go any lower at this point in time. If it does go lower, there's a chance it could hold, but there's a very strong chance that it breaks and probably heads to the low range of around 16, 17 bucks even. It could chase that whole number. So let's just continue to monitor silver, but it still is technically a chart that has had a bullish breakout. You've just retraced most of the breakout, and now it needs to make a potential move up. This would probably likely coincide with a dollar softening. So the dollar is still technically in the short term inside this bearish bar. So with that understanding in mind, it does favor that if we get consolidation without taking out this wick, we could see continued move down in the dollar. Now, it's not going to move down tremendously. The bull market in the dollar is still not done, but enough for our style of trading and the way we're positioned. If we get a 1 to 2% decline, which is what I have priced in, I have about a 1 to 1.5% decline in the dollar. Actually, a little bit more now from today's rally. I still have it priced in that about 1.6 now at the minimum to about 2.4% we could see a decline. So why I think that is this is still technically inside this bearish move is still inside of this bullish action. So therefore all the bearish power is still in effect in the short term. Arguably you still have a massive uptrend, which does favor more upside. But if you look on the longer time frames, it is extended and overbought on every single time frame. So you need some consolidation in the dollar on the daily chart for it to continue to move up. And the consolidation happens from moving to a low end of the range to a high end, from a low end to a high end. So as long as we stay under this trend line, I'll be pretty happy with the dollar price action. And you can see that there's a key resistance level here. This was your original breakdown line where you had a little mini intraday shoulder here, a head, another shoulder, which triggered over here. You broke down, you headed to your support range, and then you were teetering along this resistance line, which you actually eventually broke through, but you've never confirmed above this line on a daily close. So that was the key aspect. And now you've broken down, which yesterday you broke this line and you're waiting for confirmation, but you still never technically got confirmation to the downside either. But this price action is still bearish. You're at resistance. The dollar is kind of at that inflection point where if it starts to fall, you will see that continued move in equities to the upside. And right now, still technically the dollar is in favor of a short-term move, not a long-term move down, a short-term move down to the low end of this range. So let's just see how things shape up over the weekend. Bitcoin has had a little bit of a negative reversal right now, but basically, if we flip to the daily chart, Bitcoin had that beautiful reversal, But unlike a lot of stocks in the indices that gave up yesterday's complete reversal, Bitcoin has actually held most of its reversal. It's even showed better relative strength than the likes of Apple, the likes of the S&P, because it has held pretty much most of yesterday's reversal. If you look at many stocks, they've given up half to 60% or even to the full candle reversal. So Bitcoin is showing relative strength, which is why we're long. Obviously, we're slightly out of the money. I'm watching a tight stop loss, but right now I'm still comfortable holding Bitcoin's price action. If we can get some consolidation here, even on the longer term time frames, just to potentially challenge this support level, this downsloping trend line again, then it looks like we could have a positive move next week. Bitcoin's kind of going to be the futures chart, in my opinion, for the overall equities. And considering in frequent times, you know, within the last month exactly, so since August 14th now all the way to, basically 2 months, August 14th to, we've attacked these trend lines now. 1 time failed, 2 time failed, 3 times. The thing about hitting a trend line 3 times in technical analysis, once you hit it the 4th time, it's very likely to break to the upside, or it's very likely to break to the direction in which you hit it. So since we're tagging it to the upside, the 4th hit of this trend line is very likely to break to the upside, which is why I'm still even interested in accumulating a little bit more Bitcoin at these levels to slowly bring our average. But we're not out of the money by any means. We're still trading way below the 2017 high, and honestly the upside that we are potentially going to be gaining if this does break out versus the risk to the downside certainly is a very, very probable and trade that I will always take basically 10 times out of 10. So let's just watch Bitcoin over the weekend. It should give us some inside indication as to what the markets will do, but again, it could be pretty quiet heading into this weekend, just depending if there's no economic news or crazy war started. Everybody, please enjoy your weekend and give this video a big like down below.